Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Fosun International Limited annual report. Fosun International Limited operates across various sectors including health, happiness, wealth, and intelligent manufacturing. The company's business segments include health, happiness, insurance, asset management, and intelligent manufacturing. The health segment focuses on pharmaceuticals, medical products, and services, while the happiness segment invests in tourism, leisure, fashion, and lifestyle industries. The insurance segment operates insurance businesses, and the asset management segment handles asset management, market investments, and company investments. In addition to these core segments, Fosun International Limited also engages in various other activities such as intelligent manufacturing, capital investment, property development, retail, medical research, tourism, and banking services. Its diverse portfolio includes the production of iron, steel, and new functional materials, as well as the sale of jewelry, dairy products, wine, and beverages. The company's extensive range of businesses and services also encompasses digital and intelligent solutions, underwriting insurance, and providing financial services. With its presence in mainland China, Portugal, and internationally, Fosun International Limited is a significant player in various industries around the world. Fosun International Limited maintains a market capitalization of $34 billion, broadly in line with the industry peer group. Fosun International Limited trades at a lower price-to-book ratio of 0.25 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 75% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. On the growth side, several factors contribute to the increase in revenue. Strong performances by Fosun Insurance Portugal and Peak Reinsurance are notable, as well as favorable performance recorded by insurance companies under the group in 2025. The expansion of international operations, non-guaranteed product sales, higher investment yields, and deepening global diversification strategy also drive growth. Furthermore, the company's strengthening presence in high-growth emerging markets, expanding penetration in mature markets, and innovation-driven strategies contribute to revenue growth. Additionally, disciplined underwriting, ecosystem leverage, customer operation, technological innovation, and digital intelligence play a significant role in driving revenue upward. On the decline side, several factors contribute to the decrease in revenue. The disposal of HAL, downward cycle of the real estate industry, and Bund Finance Center's recorded decrease in total operating revenue are notable. Year-on-year declines in iron ore prices, sale of goods, properties, gold and jewelry, ore products, pharmaceuticals and medical products, fashion products, and others also contribute to revenue decline. In terms of segments, the health segment experiences significant growth, while the happiness segment sees a substantial decrease. The wealth segment shows minimal increase, and the intelligent manufacturing segment records a sharp decline. Geographically, Chinese mainland revenue decreases, while Portugal revenue increases. Other countries and regions experience a slight decrease in revenue. The financial performance of various companies within the Fosun Group has undergone significant changes in terms of net income and profit margins. On a positive note, Fosun Insurance Portugal saw an increase in net income by €101 million, while Pramerica Fosun Life Insurance reported a substantial growth of RMB 650 million. Peak Reinsurance also experienced a 15.8% year-on-year increase in net income. In contrast, Sisram witnessed a decline in net income by 13.1%, whereas Yuyuan suffered an even more significant loss, with its net loss increasing by 382.6% year-over-year. The reasons behind these changes are multifaceted. For instance, the insurance sector as a whole experienced increased revenue and profitability, contributing to the growth of Fosun Insurance Portugal. The expansion of international operations in Fosun Insurance Portugal also played a crucial role in its success. Conversely, Yuyuan's reduced revenue was attributed to asset impairment provisions and goodwill impairments. The investment result drove net income growth for some companies, while others struggled with declining revenues and profitability. Overall, the changes in net income and profit margins reflect the diverse performance of various Fosun Group companies. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. According to the provided information, the company has achieved a positive operating cash flow of RMB 4 billion, excluding any impairment provisions. This is a notable milestone, as it suggests that the company's business model is generating sufficient funds to cover its operational expenses and investments. The exclusion of impairment provisions further highlights the company's ability to manage its finances effectively, resulting in a clean and positive operating cash flow. The company's debt level has experienced significant changes over the past year. In January 2025, the debt increased from USD 300 million to USD 500 million, indicating a substantial rise in just 2 months. Furthermore, the total debt level rose by RMB 490 million, 249,840 between December 31, 2024 and December 31, 2025. Additionally, the total liabilities increased from RMB 247 million, 859,868 to RMB 547 million, 932,664 over the same period. In contrast to the rising debt levels, the company's interest expenses have shown a downward trend. Despite remaining stable overall, there was a notable decrease of more than 60 basis points in interest rates from 5.6% at the end of 2024 to 5% at the end of 2025. The net interest expenditures also decreased from RMB 12,726.2 million in 2024 to RMB 12,373.9 million in 2025. Specifically, interest expenses, net, dropped from RMB 12,717,988 in 2024 to RMB 12,365,321 in 2025. The company's performance varied across different segments and regions. On the positive side, pharmaceuticals, insurance, overseas operations, health, wealth, innovative drugs, Henlius, HAFS, and BCP all showed strong results. These segments contributed significantly to the company's overall growth. In contrast, certain areas underperformed. Real estate projects struggled, while non-core business segments with impaired goodwill and intangible assets also faced challenges. Additionally, happiness and intelligent manufacturing segments failed to meet expectations. Management is emphasizing a clear strategy for the company's future growth. The primary focus is on core businesses that will drive steady, long-term expansion. Innovation is identified as a top priority to propel growth forward. To achieve this, the company is adopting a dual-engine approach, combining biosimilars and innovative drugs to fuel progress. The management team is also prioritizing high-growth areas while optimizing asset structure to maximize efficiency. This includes positioning the company as leaner, healthier, and more sustainable. Furthermore, the company aims to deepen its global operations through globalization and integrate operations on a worldwide scale. Strategic initiatives are being implemented to accelerate growth, including capacity enhancements, biologics partnerships, and investments in complex injectables and CDMO business. These efforts will be driven by research and development pipeline leverage, ensuring a robust foundation for future success. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out significant amounts to its investors over the past 2 years. In 2025, it distributed RM 149,397,000, while in 2024, this figure was even higher at RM 283,250,000. In addition to dividend payments, the company has also engaged in share buybacks. Specifically, in 2024, it undertook a share buyback program, as mentioned on page 7 of its financial reports. This demonstrates the company's commitment to returning value to its shareholders and maintaining a strong relationship with them. That concludes the financial summary for Fosun International Limited. Feel free to comment below, and I will be happy to answer them when possible.